represents one of the biggest investors and most experienced investors in the US. Really looking forward to hearing more about this. I think we're going to go directly into some short presentations first by each one of our panelists, and then we'll go into a bit more of a deeper dive into startup, investing, early tech, and all these kind of interesting discussions. William, would you like to start?
Sure. So my name is William Balbine. I'm a general partner at SOSV. So we're a venture capital firm with 300 million US under management. We're a bit different than normal VCs in that we invest globally. Most VCs are kind of local, but we invest globally. We invest through accelerators. So we run 7 accelerator programs around the world. So we invest in the companies that we work with first. Then they move into our offices. I have slides, but whatever. They move into our offices for a residential program, and then we invest again. And then I'll just use this slide. Thanks. And then finally, we invest a little bit differently in that we're global through accelerator, but by vertical. So we focus on verticals. I run software, which is China Accelerator and MOX. We also invest in hardware through our HACS program, which takes companies from prototype to delivery all the way through up to volume and funding. And then wetware, which is biotech. So we're the number 4 most active seed investor in the world. Last year we invested in 167 companies. We have about 700 companies in the portfolio. What else? I think that's probably about it. The last thing is we're, as of last year, the number 2 most active investor in female-led startups in the world.
Fantastic. Kyle?
Let's see if I can figure out how this works. Hi everybody, I'm Kyle. I'm the co-founder of ReadWrite and ReadWrite Labs. We are an accelerator and media company based between San Francisco, Hong Kong, and Shenzhen. We work with entrepreneurs around the world, helping them to be global, think vertical, and act very local in their respective markets. In addition, we also do a lot on the media side, helping to bring exposure for companies around the world through our landscapes, research, and data on various industries and cities around the world, and work with governments to create beautiful maps like this of all the companies that are existing within a location. And then, give me a minute, there we go. And then we host a number of activities helping to bridge the gap between China and the US through cross-border trips, cross-border initiatives, education, and also helping those companies establish locally between the US and China. And just like William, we ran an accelerator and worked with over 100 companies in our portfolio, some of which represent here in Hong Kong and China as well, and are very focused on the Internet of Things.
Marta?
My turn? All right. Good morning, everyone. My name is Dr. Marta Dowejko. I'm a research assistant professor with the Hong Kong Baptist University here in Hong Kong. And I've been in Hong Kong for quite a while already. I did my PhD here as well. And I've been researching entrepreneurship in Hong Kong for quite a while as well. So since I am an academic, you will have some slides. But don't be scared. This is actually related to exactly what I do to help startup ecosystem. It will give you a little bit of more background of how Hong Kong ecosystem looks like, because we have time to map it out. You guys saw what we do. And hopefully that will help the discussion. That's just something for us to ponder on. What Einstein said, that nothing truly valuable can be achieved except by the unselfish cooperation of many individuals. And I think that really applies to what we're trying to do here, right? And what the panel here is going to do today. So let's take a look at what we have been actually doing in the ecosystem. So this is a map of the collaboration within all the stakeholders that are present on Hong Kong market, and it took us some time to map it out. But this is just to show you that there are a few there are some connections that still need to be fixed. For instance, angel investors are still not collaborating as much as we would like them to with the rest of the ecosystem. You can see that Hong Kong government is very efficient in connecting with lots of people, and so are the venture capitalists, but the angels, we still need your help, guys. But when you look at it a little bit more in depth, what happens is that actually every single actor in the ecosystem has their own role, right? And usually it should look like this. We start on the top, we have leaders, we have entrepreneurs. We have those who are actually out there to create new businesses and to contribute to innovation. And going down the pyramid, you have brokers, so these who help them to connect to others, supporters such as governments, feeders, which are the investors, but also universities, and at the bottom of the pyramid are mentors. And now I'll show you how it looks like in Hong Kong now. Okay, so that's the situation. So we have plenty of feeders, plenty of investors in this room, but we have very, very few mentors. And this is something that I would like us to elaborate on this panel today, is how to
Trying Accelerator and for mocks and for hacks, they solve very, very specific problems. And if you don't have that problem, you shouldn't go. So it takes a little bit of research and try and learn what the attributes are of the problem that the program that you're applying to. And that's actually an easy way to get in, because through that research, you can pitch a bit better. So for us, we're a little bit later stage, because we're helping companies go cross-border. So that means that they already have a product, they already have users. 90% of our companies already have revenue, and 20% of our companies are already profitable before they come into our program. And if you're on mobile and you don't have a mobile, if you don't have a mobile app, don't apply. So if you don't want to go to India or Southeast Asia on mobile, don't apply to mom. So that's on the one side. In terms of, we're a mentorship-driven program. We have 290 mentors. They mentor for various reasons, but no startup is the same. Which is why we don't do a lot of companies. We're not like Y Combinator that does 140 companies a batch, or some of the other Valley ones that have like 40, 50 companies a batch. We do 8 to 12 companies a batch, usually around 10. And so we spend a lot of time with few companies, and again, trying to help them do a specific thing. Because in the end, we're service providers of it. So yes, we invest. We invest 120 to 180,000 per company, pre-program. So it's a pretty rich program. But they're also giving us equity for that program. For us, it's generally about 5–6%. So we have to provide value for that service. And so far, so good. We usually generally measure success by number of countries scaled into, and then how can we grow revenue. And it's not just in the 3 months, although that counts. But how do we grow revenue over the first year, second year, third year, and how much revenue can they get? So far so good. We have a 36% net realized IRR over the last 18 years. So after our fees and whatnot, we've returned 36% every year compounded for 18 years in a row.
It's very impressive.
Well, it's off my track record. I just joined 3.5 years ago.
He's buying lunch after this.
But we also are very happy to have the first unicorn to come out of an accelerator in Asia. Come out of China Accelerator 2 years ago. It's a Hong Kong company called BitMEX. And they're a unicorn based on net income, not based on a VC valuation. So the founders are very happy to continue to own 94% of the company.
And to hit back on one of William's points, so you mentioned SOSV, and I'll give you total credit because you guys do this very well, but when entrepreneurs are looking at accelerators and incubators, sometimes one of the things that they miss is doing the research to figure out which program will provide them the best expertise. So we were IoT, very focused on the Internet of Things, not as general programs otherwise. And there are some programs that are very general that have the mentors, have the resources that can help them be successful. And SOSV has done a great job of saying, okay, here's a vertical that we have great resources and expertise in, let's create a program around that. Here's another one, let's do that. Here's hardware, let's do that. So for those that want to join a program, or those investors who want to continue to support or the ecosystem, you've got to focus around those specific areas and not always be so general in some cases.
Right, so you've got the general kind of accelerators and incubators, and how do you basically accommodate for the variety of sectors that covers, and then you've got the much more vertically aligned kind of accelerators and incubators. And William, you're definitely buying lunch now, I think, after this.
The money's in there, not mine.
But that brings us to a good point, actually, about the whole funding model. So the VC, the standard VC model, which came out of the US several decades ago, and it's still the main kind of funding model, and correct me if I'm wrong, that's being used to fund startups, whereby the startups approach angels or someone who's just going to give them seed money, they move to certain stages, they get either apply for accelerators, incubators, or individual VCs to get funding. Now some people have actually said that that's due for disruption as well, and we've arguably the whole accelerated incubators is one alternative way of actually getting funding and mentorship. But there's all these other ways as well, the new different kind of assets, and we're hearing ICOs, we're hearing a whole bunch of different things. Can we get like Marta and Ryan giving us some input, and I would love to also get you folks weighing in on this one actually.
I'm going to throw one thing out there and then you guys go, because it'll create probably the biggest issue. I think both sides are primed for disruption. The accelerator model in its traditional sense is broken. The incubator model in its traditional sense needs to be evolved. Right? Companies and things are moving at a faster pace, and companies are looking more on a global scale versus a localized scale. When they get past their first few months, or when they start to get really growing and scaling. And when it comes to venture, you hit it perfectly, and you've got a company in this, so I'll give you even more credit. That lunch is going to be really nice, by the way. So the ICO markets, the traditional way of venture, the angels, the VCs, all of that no longer has a traditional one path rules all. All of us are in a position to be disruptive.
Fantastic. Let's tell us more about the disruption, Marta.
Thank you. I agree that we're looking at the disruption as it happens now. I spoke to several startups that actually rejected offers from investors because they wanted to do an ICO, and because they still, this money comes with fewer strings attached in terms of the strategic direction we might take afterwards. But while this is one way of doing and looking at things, I would still stick with my mentoring argument, because at the end of the day, just the money in your bank will not give you the resources you need to advance your business. And at the end of the day, I think we should look into merging different types of venturing, different types of financing the growth of businesses. So it's not only it's not only the money, really. Everything else that comes with it. This is what brings most of the value.
Money's just a piece of it, right? That's one step of the bigger puzzle.
I think Mark and our team looks at fundraising in a little bit different way, which is that fundraising should not be the goal for us. We're looking for companies that how far can you stretch your angel investment or your seed investment? How can you go make money? Like, making money for your company is the goal. The goal is not to raise money. And so I think ICOs can sometimes be really easy money, but a lot of times the best results happen when an entrepreneur's back is against the wall, when they have maybe 3 months of runway left. What are you going to do? You have to go make money. And that's often when the most creative solutions come, and we see that a lot. We had a company called Power Practical that was on Shark Tank, and they came up with pretty nice consumer electronics products. They would come up with an innovative design, something that looked really cool. They targeted sort of the outdoors market, and they were running out of money, and they did a Kickstarter, and they came up with a great product, and it got funded, and they went and manufactured it, and they were making money, and then they found Amazon Exclusives, which is a great program for startups. And they've developed this model that came out of needing funds, where they are going to their customers, they're figuring out what they want, they're doing a Kickstarter to launch the product, and then they're moving the product onto Amazon. And it's super sustainable, and they're growing, and it's doing really well. But it has very little to do with an ICO, very little to do with venture funding.
But isn't the ICO a very viable kind of funding model? I mean, there is a lot of hype at the moment about it. William, I'm sure you've got a point of view on this.
Yeah, so we try and hack models. So we thought the VC model was busted. So we did an accelerator, but with a VC. The accelerator model doesn't make any economical sense unless you have a VC, which is basically why all the accelerators are going out of business.
Surprise!
Yeah. So we were the first. There were a lot of accelerators that went VC. We were the first VC that went accelerator. But then we keep on hacking the model. So we're number one in the world in crowdfunding. Our average Kickstarter campaign raises $400,000, and we were 11% of the $1 million plus club on Kickstarter. Because hardware companies can't raise money, like really hard, for very good reason. But pre-sales, Kickstarters, crowdfunding, is very effective. So I think we've raised over $30 million or $40 million in crowdfunding on Kickstarter and Indiegogo and some of these others. So that's like another hack. The fourth hack that we're doing now is MOX. So MOX is our mobile-only accelerator, and so it's a fund, we invest. It's an accelerator, we help the companies with mentorship. But we also set up a startup inside of it where we run around the world and basically sign business development partnerships with phone brands and app stores and other apps and telecom carriers one day, hopefully, where these guys will promote our apps in return for not money, but revenue share. Not money up front, but revenue share. So we've signed promotion partners with 167 million monthly active smartphones, and they promote our crap for free, in return for revenue share, but not money up front. So again, that's a hack. And it was very painful because running a startup is very different than running an accelerator. I'm pretty good at running an accelerator. I kind of suck at running a startup. I did 2 of them. It was horrible. So we keep iterating. And so when crypto came about, we started investing in crypto in 2015, and I used to work in Deutsche Bank in Hong Kong, and I had 11 years in equity research. So it's like, trading. So we invested in the trading side. We got lucky with BitMEX, but it's another hack. It's another way to solve a problem. We were solving cross-border money remittance. So how do you get money in and out of China? Well, we're doing that, a bit of that. It's legal-ish. I mean, the next hack is how do you raise money? So we invest in foreigners. And it doesn't matter where you are, the companies that we're bringing in are foreign. In Hong Kong, they're from China. In China, they're from Hong Kong, or all over the place. And foreigners don't get funded. Locals get funded, foreigners don't get funded. So our companies never have any money. I mean, would you fund a French guy in China? Chinese people wouldn't. Why? Because there's a good reason. There's only like 2 successful foreign, or maybe 4 really successful foreign entrepreneurs in China.
Especially in China, it's way harder to start a business if you're a foreigner.
Yeah, it's way harder. So,
but I think that actually says a lot about an entrepreneur. If you can get traction as a foreigner in China, then you work hard and you'll push through barriers.
And so, so we have companies, and we take a profitable first and then raise money because there's no other choice. But with ICOs, we've completed 2. We have 13 more in process. And it's a way for people to tap capital to help grow their businesses. But the key thing is that we focus on the trading side of things, and we focus on taking traditional businesses or traditional industries onto the blockchain. We're not like super crazy crypto land so much. So our companies generally have users. They generally, hopefully, have an economy, or the beginnings of an economy. They generally have some revenue, and that's our approach to that. But if somebody wants to give us $20 million in 60 seconds,
you can take it.
I was just going to add to that too. There's actually an interesting disruption happening. I invested in a company that was an accelerator in Eastern Europe, and they built the accelerator solely, their ICO and their accelerator solely on the fundraising that they got through the ICO. So we all invested, my peers, we all invested about $5 million into this accelerator program. That money then trickled down to each individual company. Those companies had then their seed capital that's kickstarted the company, that then they went out and raised an additional ICO. 500 Startups alumni just did something similar called the 22X Fund. One of our companies was a part of it. Each company got $2 million, or up to $2 million, invested through one large portfolio. So everyone put into this big portfolio, and then that trickled down to smaller companies. And so that's, in terms of disruption, and ICOs in particular, I think that's a very unique model. The ICO market of just, there's a shit ton of capital, so let's just take it. That's not practical, and it's not going to last. We have that happening right now. The markets have leveled out. ICOs are starting to kind of have to rethink themselves, to William's point of like,
stopped 3 weeks ago.
Yeah. It's really hard stuff. And so now things are having to actually focus, and I think portfolios through ICOs are going to be a pretty interesting trend come about?
Actually, your portfolios through investment directly into the accelerators and incubators by a number of investors. I've seen more and more of that happening even here in Hong Kong. Yeah, and you know, one of the examples at the Betatron, one of the demo days, I saw this this person who flew in from London that evening. Literally, he was leaving after the demo day that Betatron was doing, a multi-billion-dollar hedge fund. And he's basically going around the world attending different sort of like accelerators and incubator demo days to see, you know, whether it's worth investing in that. So lots of really interesting things happening. I'm just cognizant of the time. How are we doing? Do we need to move into the Q&A? No?
We barely are on the stage, so
yeah, because I know that we started a little bit late. I don't know what kind of timing we've got, but it would be fantastic if you know, we can get a few minutes just to ask any kind of questions. We've got such esteemed experts here. I mean, some really, really active investors. If anyone's got any questions, now is the time to actually, you know, get their attention.
I actually have one question.
Sure.
Even though he's a friend of mine, and this is something I don't know because we started talking about it and the event started. So we've talked a lot about ecosystems in cities, in countries, in our experience, but Mark Cuban companies, I'm going to hit on in a minute, has its own internal ecosystem. What is that like? What does an internal ecosystem look like from Mark Cuban outside of an incubator model or outside the city?
Yeah, I mean, it actually takes somewhat of a form of an accelerator in a way. It's definitely approached a lot different, but you know, we have a team of about 10 people with varying backgrounds that are working on business development opportunities and marketing for these companies and just helping with their growth. You know, we do work with other investors to connect for follow-on funding. Mark has, you know, his own enterprises that can become customers for some of these startups. So, for example, Alyssa's Cookies, which I showed you, is a product that's for sale in Mark's movie theater chain, right? So, in some ways, we have these kind of like testing grounds for our products. On the enterprise side, you know, we're trying to develop relationships on behalf of Mark with the potential enterprise customers. And then, you know, also creating a network within, you know, between the companies, so that the companies are starting to share resources with each other. It's a really interesting mix because we have these 75 Shark Tank companies, the majority of which are very, very small, very early stage entrepreneurs. And then we have this other half of the portfolio which has a lot more experience, and they're larger in their technology companies and they know how to grow. And so, you know, something that's been a big priority this year is bridging that gap and having our entrepreneurs share, you know, giving back as well under the Mark Cuban umbrella.
Yeah, I think this is something that is evolving right now. That's the new business model that is actually going to help lots of startups. It's where they start developing their own ecosystems. Because money is one thing, right? Having an ICO may be other thing, but it all has to serve a purpose. And given that lots of startups have very limited resources, if they pull all those resources together and start helping each other and filling those gaps, this is when they actually start growing, right? So this is what you guys do.
Yeah, exactly. I mean, I like to tell people my #1 job is to reduce Mark's stress. So if there are ways that I can get our portfolio companies helping each other, that's awesome. Because then it means, you know, one less midnight email to Mark.
Okay. Thank you so much. I mean, has anyone got any questions you would like to raise? No? I've got one here. Has someone got a mic?
You want a mic? No.
Can you give us your name and the company that you're working at as well, please?
I'm Jayne from South China Morning Post. So I've got a question for you here. Like, we've seen China has been cracking down on a number of news aggregation apps as well as other forms of technology startups. So it seems to me that the uncertainty of investing in Chinese startups is like growing. So I wonder what's your take on this phenomenon and how can investors like deal with the situation, because your investment could just evaporate overnight if like China has like banned the use of video streaming or other forms of technology services. Thank you.
Thanks.
Yeah, so I mean, I started covering China internet in 2004 as an equity analyst. And these companies were public on the NASDAQ, Sina, Sohu. Their total market cap was about $3 billion. And now it's over, it's over 2 trillion. There's been regulation and banning this and censoring that for the last 12, 13 years. The bottom line is it doesn't seem to have much of an impact or a difference. You just have to know where the invisible line is. There will always be regulation, they'll always move back and forth. We've seen when I started covering Tencent, it was less than $1 billion. Now it's over a $500 billion company, publicly listed, regulation hasn't seemed to have much of an impact on their growth. So you just have to be aware of the regulations and where those invisible lines are, or the red lines are. This uncertainty is nothing new. It's been there since the very beginning, and it's already priced in.
It's also not specific to China. It sounds like it because we're here, but it's not specific to China. I mean, this, to William's point, this has been happening for decades. I mean, since investing has begun, there's always been the risk that you're going to put your money in something, and 1, it could die, 2, it could get banned, 3, something happens with it and it becomes successful. So our job as investors is to do the due diligence, not just on the company, but the market itself. And when it comes to China, yes, things are changing. There's also a very clear path of what China is looking for, whether it's from the government's initiatives, it's the companies that have been successful. It's a very, very clear path. The next step is, again, to William's point, is know that line. Do your research and understand the industries that are going to be going and ones that are a little bit on the gray side. And the last one I'll say is that just because an industry gets banned and your investment essentially becomes zero, it's actually not. That company still exists. That company has IP and has technology that can be replicated in potentially a new market. While China is, yes, the world's largest market right now, there's also India, there's also all of Europe, South America, Africa, the rest of Asia, North America, and so on. There's plenty of other places for that technology to potentially be replicated, in some cases to multiple companies, and really multiply your investment further.
And that's an area of opportunity. So I'll give an example, just like Europe. Europe, with their personal privacy law that's coming into effect now, basically, in effect, made blockchain illegal. Or most implementations of blockchain illegal, or many. Is that going to kill blockchain, or is it going to kill Europe? Is it going to kill blockchain in Europe? Probably not. But that's government regulation banning an industry or a type of technology.
Which also leads to the formation of new technologies and new opportunities. Right? And I kind of just took my point, so go ahead.
Yeah, so that's how innovation starts, right?
Yep.
When we have to go around certain regulations or bans or everything else.
Or just an inefficient market, which is what happened with the whole banking system in China. Cognizant of time, one more question if anyone has one? No? Okay, I would like to say a massive thank you to my fantastic panelists. It's been a real pleasure. Thanks again to Global Sources for inviting us to speak. And, we hope collectively we'll build a much stronger ecosystem. Thank you.
Thank you. Thank you so much for